This is the New Zealand yen 60-minute time frame. It is Monday, 15th of October. This is the first trade of the week, and this is a potential head and shoulders. Now, I've actually entered in without a initial structure high, which is what is usually required for these head and shoulders, but I have a bit more confirmation and I've used that as an entry. So this is a trade that is a little bit more aggressive than normal. However, we have a very nice risk to reward, and we do have additional confirmation without that initial structure high. So we're currently risking 22 pips for 104. You can see right here that we have the left shoulder, the head, the potential right shoulder. And what I'm going to do is bring over a new chart and we'll do our higher time frame analysis. So this is the daily time frame. And what I'm just going to do is zoom out a little bit here, and I'm going to put a structure level on where we've come down and tested multiple times. So if you look left here, multiple tests, there, and we're currently trading here. Now, what price did is we came down again, and then we actually violated to the top side, and then we've pulled back down again. So look at what we've done here on this level. This level has actually been held, and so what the market did is we had a big bearish candle, and instantly it's been sucked all the way back up. And so you can look at the market tried to push down but instantly sucked all the way back up the following day, indicating we're not quite ready yet to push any lower. Let's go to the 240 time frame. And this is what I'm seeing here. We had a nice rally down. There's the left shoulder. We came down for the head. Now, quite importantly, the head did not violate the lows. Look at the area that I've highlighted here. We then pulled back, and we've now pulled back for the right shoulder. What I'm just going to do is delete everything off. I'm just going to highlight from the left shoulder, that structure level, to here. And look at what we've done here on the 4 hour. Okay, indecision. Okay, indecision. And if I leave, in fact, if I put a structure level on here, price has not been able to violate below that level. And so we've held the left shoulder. We've not been able to violate through this level. We've got indecision candles, and at this stage, this is a decision point. This is the market deciding, are we going to go higher or are we going to go lower? So now I'm starting to build a picture that, okay, we're putting up a bit of a fight here. We could see this being a decision point, but I never got the violation to the upside for the head and shoulders. But look at what we're doing again here on the 60. We're holding this level. And look at what we're doing here. Wicks, we pulled up. We came back down, and I've just entered now based on this hourly candle here, this higher high, higher close, the 9 o'clock candle. So what that means is that I was able to get stops. These are the lows here. The lows here have not been violated. My stops are just 5 pips below them. So at 72.69, in fact, I think I went a little bit further just to give it a bit of room, 7 pips below them. And targets then, well, if this is a head and shoulders, and again, you know, this area has been tested multiple times. If you look at it here, this is an area that could certainly hold, and we've got a nice rally down. So there is the left shoulder. Here is the head. Then it would look like this, the head and shoulders. And then we would have a pullback to here. Now I'm anticipating this area to hold. And we could look for an AB equals CD pattern, which would bring us in around there, which would be in between these two structure levels just here. So if I bring over the orders, it looks like that. So again, I think it was 22 for 104. I'm playing for targets a little bit before the AB equals CD pattern. You could, because this up here is a violation to the upside, and we've actually held this area, it is certainly possible here that we could see a move all the way up to this level. I'm not doing that purely because this is one heck of a big move, and I already have a 4-to-1, 4.5-to-1 risk to reward here, high probability trade. I'm not looking for those big massive moves in the market that come off, you know, half a dozen times a year. I'm more for, let me get in a high probability trade with a great risk to reward and let me get out of the trade for some profit. I don't want to hold for those big moves. There's a few reasons for that. Is because I want the profits now, but also, you know, within this is high probability that we're going to go up to the top here, and so on these pullbacks I can maybe get involved later on and have more opportunity. And so that's the way that I look at the market. So we're in the trade, we'll come back and hopefully see this thing rally on up to hit those targets. And we're back for an update. Currently 25, well we were just 30 pips up there, but you can see now that we've actually broken to the upside here. We're heading to the top of the structure levels just here, and so the next thing we need to do is to break those and obviously carrying up to our targets. I did work out secondary targets wrong. I actually took it from my stop when I worked it out. So secondary targets here are 83, not 104. Nevertheless, we still have almost a 4-to-1 risk to reward there. So there we go, currently 25 pips up. And we're back for an update on this trade, and as you can see now, we are currently 78 pips up, just 10 pips away from target again. We were 10 pips away from target last night around 11 o'clock at night, so the market is making its way back up there again. Would be nice for targets to be hit in the next couple of hours, especially if we get a strong bullish candle here. We could see the market just rally on up and hit those targets. And we're back. We have now come within 1 pip of our targets here. We're currently 84 pips up. 87 is the target, but if I zoom in here, we have actually come 1 pip away now from targets. So I'm just going to move the stop to there just in case something obscure happens and we rally down. But I'll pause the video and come back and hopefully get this thing, record this thing hitting. Okay, we're back. Currently says we're 1 pip from target. That was my alarm, which I deleted a while ago. I don't know why it still works sometimes. Come on, we're testing. There we go, people. What a phenomenal trade for 86 pips, I think, in the end. I'll double check, but 86 pips. Phenomenal. And I risked 22 pips there. So almost a 4-to-1 risk to reward in that head and shoulders. Do me a favour, if you like these videos and haven't subscribed, go ahead and subscribe. And of course, don't forget to give it a like.